Right. So now we've got 3.4, right? Crystal's research and development team led by a material scientist developed a revolutionary type of glass called what? This is the type of glass that is what? We don't care about that. Right. This innovation opens a wide range of application across the architecture and automotive industries. On 12 February 2024, in recognition of the immense commercial potential of that, Crystal decided to acquire a what? A patent. Right, a total cost of that to protect its intellectual property rights. Right. So these are intellectual properties, right? You've got your design patents, you've got your copyright, you've got your trademark, right? So section 11 G, small g, capital C, right? And it's there on the notes. It's there on the notes. Wait, man. Right. SAR says if you acquire one of those things, right? If you're acquiring either a copyright or a patent, mawitenga, right? That acquisition cost, right? If it's a copyright or a patent, right? As long as the amount that you spent is it equal to 5,000 or less than?
More than 5.
It's greater than 5,000.
More than
Yes.
5,000.
Yes, greater than 5,000. SARS says claim 5% each year. Kanjalo. Are we together? Yes, patent and copyright. Zihamba zonke. They go together. But I'm not saying that once they give you a patent, then look for the copyright. No, I'm just saying the same rules that apply to a patent apply to copyright. Because uzothola omunye phela sefunana ne-copyright ukuthi kuphi eklasini kuphi exam. No, I'm saying they have the same rules. So if the examiner gives you copyright, no, it's 5%, as long as the amount that you spent to acquire it is more than 5,000 rands. Okay. Design, if you are acquiring a design, usazi with 10%. Remember, you are acquiring, so you are spending. So 10%. Yes.
Not charges.
Sorry?
Oh, sorry, Jeff.
Right. So as you can see, design, it's what? It's 10% if the cost is more than 5,000. Then trademark, if you are acquiring a trademark, no deduction allowed. Angazi why?
I was waiting for that part.
Angazi, I don't know.
Don't ask me.
Yeah, I don't know why. But when you are acquiring a trademark, like Coca-Cola is a trademark, right? If you are acquiring that, there's no what? No deduction allowed. Okay. But now I even wrote for you, right? I said deduct all costs incurred on renewal and registration. So these rules only apply when you are buying them. But when you feel maybe I like this trademark, it's making money for me, let me renew it. I like this design, let me renew it. I like the copyright or the patent, let me renew it. Maybe like I'm a right to distribute music, rights to produce a formula, like a virus or a COVID, what vaccine. Those are rights that you acquire. So over time they expire, you need to renew them. So now the renewal costs you claim in full. No more rules. Are we together?
Yes, sir.
So those are the rules around that one. Okay, so that's what this one was section. I'm sure sometimes
That's fine. Jeff, you remember my question, right?
you said what's the what? Explain on what, by the way?
I wanted the simplest difference between the patent and design.
Oh, you mean on that part? I mean the difference. Oh, I thought you wanted the rules. Guys, who can help out?
The rules, man, I've got them. Trust me.
Okay, what's the difference between a patent and design? Who knows? I'm not an intellectual property expert. I'm not sure. They look the same, but they're not. I can't really. I'll research. I mean, I thought you wanted the explanation. If you want that, then I'll.
The rules, I'm fine. Trust me, the rules is
okay. Okay, and then I'll research it separate. Okay, sure. Okay, right. So
when you get the answers, share with us.
Okay, I will.
So you see, this amount is greater than what? 5,000. That's why we're using what?
5%.
How much you get? Just calculate fast what I'm going. Oh, it's 11.
Yeah, it is.
Straightforward. So just go and practice. Go and practice. 2 monsters. All right. Right. What's the next part? Oh, this one was straightforward. Right. Crystal owns a heavy duty machine. Right. That is used in the manufacturing of its what? Of its glass products. The machine was acquired new and unused. Right. So when they say new and what? And unused. And it's a manufacturing machine, right? Are we together there?
Yeah.
Right.
Yeah.
So one thing you should know is ask yourself, one, is this a small business or not a small business? So SARS says if it's not a small business, there is the rules are actually on the group. Right. So if it's new, right? If it's a new thing, right? On the first year, you claim 40% of the cost. On the second year, 20%. Third year, 20%. Last year, 20%. All right. If it's used 2020 over 5 years. Ningswil.
Yep.
Yes, Chief.
Yes. So if it's new
Yes.
and unused and it's a manufacturing machine and that company is not a small business, in the first year that you bring the asset into use, you claim 40% off the cost. In the subsequent years, 2020. But if it was a second-hand machine, you claim 20. All
So
right.
Jeff, I know this might be a little bit irrelevant, but it just reminds me of the question that I asked you. So in this case, like in accounting, if you buy like a second-hand asset, which was previously like depreciated by the previous owner over the useful life. So when the new owner get that asset, do they still recognize depreciation?
Yes. Yes. As long as it's not used up in full, depreciate.
If like the useful life was 5 years, so now when I get it at that 5th year, I
Yeah.
recognize it over.
Yeah, over that. Then yeah, you stop depreciating.
I stop depreciating.
Yeah, you stop depreciating.
Okay.
Remember, depreciation arises because you are trying to make money. So you're using the asset. So the asset, as you're using the money, the asset is what is. So normally they say when an asset is used up, you can't use it anymore. All right. So that's
If
why.
it's still operating, like.
Yeah, it can be operating, but when it's used up, it's used up. You can't be depreciating.
But you can still use it for business.
Yes, definitely. For how long you want. Okay, it's up to you. Okay, so this one was new and unused. So when did we bring it into use? 1 September 2000 what?
22.
22.
So therefore, in the previous, which was 2023, we were able to claim how much?
40%.
Exactly.
40%.
So they wanted to test your timeline. So that means in the current year, how much are you claiming?
20.
Yeah.
20.
Yeah. In Tobago, they're just testing you. That's why it was that simple. But if you couldn't say it, then you'll be in trouble. So what's 40% of that amount?
93,000.
93,000, right?
20%. 20%, yeah, not 40, 20%.
93,000.
So that one will come here because yes, this one is for the current year, so it will come here. Then this one you can just show it. It's up to you. You won't lose marks, or we don't show it. But just in case it was sold, it will make life easier. So that's what you do. Then you're done. Remember, this is section 12C, right? Because it's not a small business. If you're a small business, we're going to write section 12E, capital letter E. All right, then we're done with that. We come to restraint of trade. All right, a total amount of 240,000 was paid to Miss Van, a former employee that terminated her services during 2024 financial year. The amount was paid to prohibit Miss Van from engaging in any business activities that directly competes with Crystal's business and engaging with Crystal's clients or employees. The above prohibition applies for a period of 8 years after Miss Van's termination. So this is what you call your what? Restraint of trade, section 11, small c, capital letter A. All right. So restraint of trade is straightforward, simple and straightforward, right? So it's either, remember, a company is paying an employee to restrain them from what? From trading in a similar business. In other words, they're trying to eliminate competition. And SARS allows that. Why? Because SARS is benefiting from the main company. So once someone goes and starts trading elsewhere, of course, maybe SARS will benefit, but they're killing an already established business. All right. So what SARS says, okay, because you are paying someone to restrain them. All right, you can claim that cost according to this section. So this one is standard is 3 years, or so it's the lesser of 3 years. This 1/3 simple stands for 3 years, or the years that should be provided in the question. So whichever answer yields the lesser amount is what you're going to include. So you're going to say that multiplied by what? 240 here and 240 there. Right, calculate which one gives you the lesser amount. It's always the bigger fraction.
Yeah, 30,000.
So 30,000. This one will give you 30,000. The other will give you what? So you can even write it here.
80,000.
Other than 80,000. So what did we say? Include the what?
The lesser one.
Which one is lesser?
30.
Yeah, you're done. That's restrict. So 3, you should know it by head. They won't give you 3 years. All right, unless they say 2, but they won't give you 3 years, but they'll give you the other year. So 3 you should know, but the other year you provided. Then the one which yields the lesser amount is what you include. Right, we move on. Right, insurance premiums. Right now we are going into section 23H, and if you're doing deferred tax, you are familiar with this. People would ask me, the prepayment. Jeffrey, please explain to me the rules. Why there is no tax base. There it is. Right. So when it comes to this one, to a prepayment, it's actually there on the notes. Right, let's go to the question itself. Right, a total amount of 180,000 was paid on 1 December 2023 in respect of insurance premiums for the period 1 December 2023 to. So it's just someone paying for an expense in advance. So when you do that, you are triggering section 23H. You trigger section 23H. So here is your timeline first. We are almost done. Patience. We need to finish this paper. I can't do it again. Right. So this is December 2023. Right. And then this is right. The year end is 31 March 2024. Right. And then you're paying to cover until what? 30 November 2024. So we are now saying, right, this payment pertains to the current year that we are in, because our tax year ends on 31 March 2024. So how many months is this?
4.
4 months,
4
right?
months.
So this one you calculate normally, right? Without thinking, as you just normally calculate. You say 4 months multiplied by what? By 180. All right? You get your answer. And then the rules will apply now, right? So what you are saying as a taxpayer, right? Your appeal as a taxpayer is, SARS, I have paid for an expense in advance in the 2024 year. Yes. So I want to deduct this cost in the current year, in which I have actually what? Paid for it. SARS says, yes, we hear what you are saying, but according to section 23H, you can deduct the remainder, right? Which is how much? 4/12 times 180? 60,000. Minus 180, how much is left?
120.
Yes. So you want to deduct you want to deduct the whole 180 because you are saying I've paid someone, so it's an expense in the production of income. So I want to deduct it now. But SARS says no, but this other expense is for the next tax assessment. SARS says, okay, it's fine, we hear you. So you can deduct the other portion that falls into the next tax year, which is 2025, which is 120, right? If this 120 is less than what? 100,000, or the period left covering this 180 is what? 6 months or less. So here, how many months are left? You have covered 4 months. How many months are left? 8.
8.
So 8 is more than what?
6 months.
6 months.
So therefore, so the rules are either if one of them qualifies, you can deduct this 120,000. But here we find that 120 is more than 100, so it doesn't qualify. The period left is what? Is more than 6 months, so it won't qualify. So therefore, you cannot deduct the 120 that is left. I don't know if you understand me.
It's tricky ngishaya quiz wakhona wokuhlanya.
Yes.
What?
Because the way I read it on those quiz, I felt like they were saying Angazi silungise didana, Jeff. It's like they were saying if one of them is present, you deduct. Angazi njani ingishayile vele hayi.
Oh, I didn't know that you guys were writing the so I don't have.
No, there are those quizzes to open a new module,
Oh, okay.
not serious quiz.
Okay. So, okay, that is the case. So you deduct normally for whatever months fall within your tax year that you're in. And then the remaining portion, it should be less than 100,000. Or the period covered that is remaining should be 6 months or less. And then
Okay, let's say,
deduct the full amount. Yes.
what if we're left with 5 months, not 8?
Then
Then
yes,
we'll be able
to deduct the one.
In full, the 120.
Yes, in full.
it's
Okay.
above 100,000.
Yes, so even if the amount is above 100,000, but the months are less than 6, you deduct everything.
One of them
So
must be safe.
Yes, one of them must be set. One of them,
Oh,
just one, not both, just one. So even if it's 500,000, but it's 3 months left, you
but what if they both satisfy? What does that?
yeah, that means same. As long as one of
Okay.
them is done, you go.
Okay.
Right. So 180 minus what is 60, which is what? Which is the 120. So here you said how much here? 60,000. So there you claim no questions. Then the problem is this 120. So this one needs to be met. If 120 is less than 100,000 or the period remaining is that. So here with 8 months. So therefore no deduction on this 120 only. Then you move on. Then almost learnerships and section 11J. Right, learnerships, it's section 12H. Section 12H. So AMA learnerships, they are then to encourage and improve the country. Okay. So if you enter into a learnership program, whether you're with UNISA or UJ, it's just a learnership program. So as long as you meet the requirements and you have the paperwork to prove that you are under a learning program, SARS allows the company to claim, right? On these it's not on the amounts that they are paying. No, they are figures that SARS uses. So it's a table, right? So it has nothing to do with how much school fees they are paying. No. Yes, that's separate. But we're talking about if you enter into a learnership program. All right. So there are things that you should note. So I wrote the page on your student approach so that easier to explain. Let's go there. So now we now know the difference between the patent design. Right. So
Yes.
there's the table. It's on page 332 on your student approach, right? I couldn't write it down. Right. So there is so if you are level 1 to level 6, there's an annual allowance of 40, right? If you don't have a disability. Okay. So first of all, determine which level are you on. And then when you're entering, so I usually call this annual allowance an entering allowance. So for going into that, if you're under level 1 to level 6 and not disability, right? There's an allowance of 40,000, all right?
Yes.
If you have a disability, 60, goes up, right? Then upon completing, if we successfully complete that, you get a 40,000. Okay? And then if you have a disability, you get what? Right. And then there is the other level. Once you're under level 7 to 10, right? The allowance becomes 20.
Yes.
Yes, yeah. I don't know. Right. And then better, no? Right. And then if you have a disability, 50,000, yes?
I was just saying that's when it's supposed to be going up, isn't it?
It's supposed to be. Obviously, there's a reason why.
Don't understand.
All right. So then upon completion, you get 20,000 and then again that. So just need to know, number one, master what level you'll be given on the question and if the person has a disability or not. So just have whether you draw it somewhere or something, whatever you want to do, but master this one because sometimes once you forget, you find yourself confusing the figures that you should use. Okay. So the second thing that you should know about learnerships is that the allowance one you apportion, right, depending when you started. It's like you starting UNISA second semester. So that allowance will be from 1st July until the end of the year of your company. All right. But you are going to run it also, you are going to you are going to use it in the next subsequent year because you're supposed to claim for a full 12 months, but depending when you started. So if you started at the beginning of the year, that means it's 12 months you claim. But if you started in the middle of the year, you apportion, right? And then you finish up the remaining months in the next year. And that has to do with the allowance, sorry, annual allowance, which I call the entering allowance. You apportion it. But the completion one, we wait for you to complete. So if you don't complete, no completion allowance. And we start decrease, we don't finish. So
Yeah.
so if you don't finish, the company won't get that. So that's why companies will push you finish your thing. So just imagine if they have more than 10 students, 10 employees doing that, they are guaranteed and they are under level 1, level 6. 40 times 10 multiplied by that. That's an allowance.
So is that 40,000 is going to my employer, let's just say?
No, not you.
No, my employer, not me.
The company. Yeah.
And they still pay you so much, so small for learnership, but they're getting money.
No, this is not a payment, it's a deduction.
Yes, but then they're kind of getting the money because
yeah, they're paying less tax, they're benefiting.
Yeah.
So these are the tables. All right. So completion, don't apportion. We wait for you to finish, then we give you the 40. If you are under level 1 to 6, no disability, 60. Under level 7 to 10, no disability, 20. Disability.
So how do they know that I've completed?
Obviously, you need to submit certificate.
Okay.
Then SARS will say, okay, you can have that deduction in the current year. Right. So
Okay.
just remember these figures. Okay. So let's go to the situation that we are given. Right. So a learnership was entered into Miss Jessica, right? An employee that has a position of what? Level 8.
Thank you.
Yes. So that means you're between 7 to 10. All right. The agreement covered the period what? Effective from what? 1 June. Yes, to 31 May 2003. Miss Jessica disability did not stop her, so they're telling you that she's got a disability. Right. From her goals, she met all the requirements of leadership agreement and successfully completed a what? Completed in record time. So you started this on 1 June 2021. So let's try and follow this timeline. So the year starts, go on April, then you entered here 21, and then the year ended on what? March 2020. Right. And then there was 31 March 2023, and then the year end is 31 March 2024. So you started here, then when the year ended here, how many months?
Is it not 10 months?
It's 10 months.
It was 10 months, right? So that means in 2022 you claimed for 10 months annual allowance or the entering allowance. So there's 2 months left. So these 2 months you were able to claim when? Here, né? Right? Then you claimed the full 12 months, right? And then you started a year course because this thing is for how many years? I think it was a 2-year course. Is that not so?
Yes, so it's 2 years.
It's 2 years. So once you have completed the first allowance, the next complete 12 months, you are claiming foot. So you started another cycle. We're claiming the previous year, which is how many months? 10, eh? Hello?
Is it not 12?
No.
Because it's a full year.
No. I need you had one that you started here.
You carried forward that
From
2 months.
Yes, you carry forward another. Yeah, sorry, you carry forward the 2 months, right, and finish up so that you get the 12 months in full. Then once you are done, you start another one by 10 months. Then you finish it here, right?
By May.
Yes. So it's got a nini. So that is April, May. Yeah, May. So that means in the current year, 2024, how many months are you claiming for?
2.
2 months.
So if it was a 1-year program, people, you would have claimed 10 months, right? And then the 2 months, then you're done. You don't do this anymore. But it's a 2-year program from what it looks
Sorry,
like.
Jeff.
Yes.
When did they specify the 2 month, the 2-year contract?
No, I'm just saying, I'm just calculating from this.
Okay.
I didn't say 2 months. Nothing says 2 months, but I think from the way it looks like it's a 2 months one. So
2 years.
yeah. Okay.
Yeah.
So based on that, that means you are claiming for 2 months on the annual allowance. Then they said you completed. Okay. So the rules are if it's a 2 years or more course, 2 years or more learnership, right? For each year, based on your what, on your level, for each year, you get the completion allowance. If it's a more than Sorry, if it's 2 years or more, 24 months or more. Yeah, let me say 24 months or more. 24 months or more. Upon completion, you get the completion allowance times 2. 24 months or more. If it's a 36 months, like a 3F degree, it's going to be the completion multiplied by 3. So,
Yes.
Yes, sir.
yes. So remember, a completion is only given to the company once you complete. So if your degree or your whatever you're doing is 24 months, when you complete that completion allowance, you multiply by 2. If it's 36 months, multiply by 3. If it's 48 months, multiply by 4. Injal. When you complete. So if let's say we were in 2021, that means we would only get the allowance, annual allowance, no completion. The reason why we are saying completion is because they said you successfully completed by this, and 31 May is here. It's in the 2024 year. So we have got the right to claim the completion allowance of disability level 1 to level 7 to level 10 is 50,000 a year times 2. Do you understand?
Yes,
Yep.
sir.
Don't worry. So right. So hence this one you multiplied by 2/12. You claim how much do we get? You get
It's 8,333.
right. And they said you completed in 2024 years, so that's why I'm multiplying by 2. You get how much there as a company? Right. Then the last one, by 9, we should be done. Right. So we are done with this one. Yes.
For level 7 to 10, is it not 20,000? Is it 50?
Disability.
Oh, disability.
They say she did not let her disability
Stop her.
stop her. So they're telling you that this person is a
Sorry, Jeff.
Hmm?
So if she did not complete, we're not going to multiply by 50,000 times 2.
Yes, there wasn't going to be. We're just going to lastly uzuqeda degree yakho. Mawusadlala usathatha one module a year sokulinda.
Yeah, Jeff, it's like you're getting personal now.
How, Jeff? How, Jeff? Oh, yes, I take
Sokulinda. Sokulinda. Right. So the last section is very relevant, right? The last section is dealing with debtors. All right. So, in accounting, when we give SARS the list of debtors, SARS says, okay, from your list, right, based on your what you call the aging analysis, there are some people that are owing us for 30 days or less. Some are owing us for 60 days or less. Some are owing us for 60 days, but not more than 90. Some 90, but not more than 120. Others beyond 120. Right. So SARS says on that total list and based on your aging analysis, right? So SARS says to you that according to section 11J, right, if people are owing, right, for more than what? Is it more than, yes, for more than 30 days, right? More than 30 days, but less than 90 days. I repeat, 30 days, but not more than what? 90 days. SARS says, right, you can claim 25% of that figure, right? 25% of that figure. SARS says those that are owing for 30 days, right, but not more than what? Yes, you claim 25% of that figure. That's a deduction, right? And then those that are owing for, I think I'm confusing a bit. Forgive me, I'm not sure. I think it's that engiyakhohlwa.
Okay, Jeff, wait. Mina ngibone ngale ndlela ngathi if is less than 120, you claim 25. Then it's more than 120, it's 40%.
40.
Yes, it's
That's
40,
what your
right?
previous recording is
Yes.
saying, yes.
Yes, it's 40. It's 40. But remember, if it's 30 days, usazi with nothing. Or 30
If what?
days, if it's 30 days or less,
Mm.
yeah, because you're still capable of paying. But when someone is lingering now and giving you stories, so where can I delete? What did you say? What did my recording say? So we say, okay, let's use. So we said what? Less than 90.
Let's start with 30 days. If it's less than 30, you claim nothing.
Then The 25, you said something there.
25, I
It's
said, if it's
60
less than
days.
120, yes.
It's 60 days, but less than 120 days.
Yeah.
It's
60,
25,
but less than.
Oh,
yes.
yeah. So 60,
but less than 120.
yes. 60, but less than
120.
120 days. No? Ngabantu abakukolodayo labo, like literal people that are owing you, right? They are owing you for 60 days, and this that there is that Kunaleo gang that is owing for 60 days and 120, but not more than that. SARS says on that total amount that they are owing you, right, deduct 25% of it. That's what we're saying. And then laba that are owing you for 20, what is it? 120 and more, right? Irate yakhuphuka.
That's 40%.
That's what we're doing. Nibambili. Ngathi abanye bayibambile. Right. So there it is the story. That's the last story, then we're done. Since Crystal allows sale of some of the goods to clients on credit, the company does sometimes experience difficulty with collecting outstanding amounts with their customers. Right. Crystal's accountant provided the below extract of doubtful debt balances. So this is the total. So for the current year, we've got 126,700. The previous year, 134,200. Okay. Then they go on and explain. So now, I think now what confused students, I'm a percentage, but don't worry, stay focused. Right. They are saying one is the current year. They are saying 60% of the doubtful debt balance, Leo balance, 126,700, was in arrears for more than what? 6 months. You understand? Right. While the remainder of the balance was only in arrears for less than what?
30 days.
So Ushuguti, if 40% is less than. So SARS says no what? No deduction.
No deduction.
Because these guys are still capable of what? Of paying. But these that are what? 120 and more. So 6 months falls within the 120 and more. So SARS says on that balance, claim what? Sibambil.
Yeah.
126.
Got it, sir.
Times.
Yes. So from the total balance, 60% of them, SARS gives you an allowance of what? Did you guys say you want to learn? Now there, right. There is a deduction. So you get marks for that. Then if it's 23, previous year you always add back. Right. Current year you deduct, previous year you add back. Why? SARS is saying, okay, remember, in the previous year, you came with a list of doubtful debts. All right. And then that means if you are quiet in the current year about the previous year, that means they've paid you back. So can you please pay us back the previous year deduction? Add it back. Are we together then? Hello?
Please go back to the question, Jeff. I think I missed something.
I was just explaining, right? I have not read the 23.
No, the thing is, I too. Oh, shit. 126,700. I thought is last year.
Yeah.
I didn't look at the years.
Oh, okay. All right. Then 2023, right, is saying 80% of the doubtful debt balance, Leo balance, was in arrears for more than what? 240 is already over what? Right? While the remainder of the balance was in arrears for what? For E9. Okay, so from that balance, those that are beyond 120, SARS gives us a what? A 40% allowance. And they say 80% was what? Owing for more than 240 days. Let's say that means the remainder, they just said the remainder, so you should know 20% is owing for what? 90 days. So SARS gives you what? 25%. But this one, guys, is the previous year. So as long as you don't come with proof to say, SARS, those guys that you allowed me to deduct in the previous year's allowance, in the current year, they've become actual bad debt. If you don't have that evidence, SARS says, therefore, add back the previous year what? Allowance that you gave you. So you calculate and get your amount, you add back this one. No brackets, you add it back. All right. And then the last. Right. And I thank you for your patience. During the financial year, Crystal employed a lawyer to assist with the collection of the outstanding. The lawyer was paid an amount of 85 in the. So this person we've employed, this person is we are incurring a cost in the production of income because we're trying to collect revenue from our customers. So this cost is incurred in the production of income. So it's going to qualify. So you come and include this amount as a deduction. Then you calculate, right? You calculate this, whatever you had, you have to add it here. You calculate, get your taxable income. This is the new rate. Multiply, you get your final answer. The 40 marks were done. Thank you for your time, people. Appreciate. All right.
Thank you, Jeff. Bye,
Thank
everyone.
you, Jeff.
Bye. Good
Thank you,
night.
Jeff.
Sharp.
So how much so